Well, good morning, traders. And it's really tough to be short markets at the moment, any kind of great conviction. The ASX 200, it's probably been one of the more vulnerable markets. It has these sort of big ranges we've been seeing of late, but until we get a weekly close below 56.75, which as you can see from the charts has been really good buying support of late. Until we get that close below, we're still looking to range trade the ASX 200 at the moment. We're looking for that market to open just above 5,700 today. If you're looking at global indices at the moment, have a look at the Hang Seng. We're thinking that's going to open a little bit higher today. The real momentum trade at the moment is to be long the Hang Seng, specifically within their banks, and that market's trading at the highest levels now since 2015. It's breaking out, it's moving to the upside. Have a look at the EEM as well, the emerging market ETF. That's broken out of the trading range that's been in. That looks like it wants to go a little bit higher as well. And the Nikkei, I think we're going to probably see a touch higher as well, despite dollar yen moving into that sort of low 113 range, which is a trade I'd been more bullish on. It looks like that's probably the wrong side of the trade, but that looks like it's a dollar weakening story rather than necessarily just a yen strengthening story. But in terms of the dollar, overnight we have heard from Janet Yellen. That was obviously one of the highlights there, with the exception of the Bank of Canada, who raised rates. It was fully priced in, but Stephen Polar's the head of the Bank of Canada, talking about a rate hiking cycle, albeit very slowly. But in this idea of global central bank policy divergence, the fact that they are embarking on a rate hike cycle, and the business confidence is pretty clear that they're going to need to raise rates further, maybe in December, I think is probably my base case at the moment. The Canadian dollar has absolutely flown. Euro CAD has dropped pretty hard, down about 1.7%. That's been the big mover on the sessions. Take a look at that trade as well. But certainly Janet Yellen really keeping to the script. That's a bit of a surprise. I didn't expect it to be so orchestrated, what we saw from the June minutes. But she hasn't rocked the boat at all. Even though there's legacy issues, as she looks like she's going to probably be replaced by Gary Cohen in February. That's an interesting story in itself, which we'll probably explore at another stage. But certainly Janet Yellen coming out, not really giving us any new colour. Bond yields have moved a little bit low. We've got the 10-year down about 4 basis points. Impressively, we have actually seen real yields moving lower as well, and that's probably very good for equities. It's probably why we've got the Dow trading at new all-time highs, the S&P moving up 80 basis points, and the Nasdaq moving up over 1% as well. And I think there's an element of traders there thinking that we're going to get a pretty good earnings season. I mean, we're going into this Q2 earnings season in America with expectations of 7% EPS growth. I think the market's telling us overnight that we've got very positive, accommodative financial conditions. Monetary policy isn't tightening rapidly anytime soon. And I think we're probably expecting 9 to 10% EPS growth as well. So, perfect storm for equities. I certainly wouldn't want to be short US equities at the moment. I think they look like they want to trade higher. Oil prices have had a bit of a move, probably dampened to a degree by the Nigerian oil minister saying, he had no plans necessary to take part in the OPEC production agreement. Although we did see a very, very strong drawdown in inventories, as predicted, I suppose, by the API numbers that we talked about yesterday. In terms of leads today, well, we've got the iron ore price, spot price down at about 2% or so. Futures are down a touch as well, so there's not going to be as good a day as it was yesterday for some of the iron ore names. Energy obviously looking like quite a good place to be. But banks will be very much the focus as well. We have seen Goldman Sachs upgrading Westpac to a buy. We've seen them CBA being cut to a neutral capacity as well. So maybe a bit of rotation there. For whatever reason it is, Goldman Sachs do seem to get a lot more of the media headlines than other banks, even though I think probably UBS do have the best banking analyst out there in Jonathan Mott. But one to watch today. If the market's going to move up and stay above 5,700, it's because the banks are going to hold that level as well. So an interesting session ahead. We do have Chinese trade balance numbers. There's no set time for them, but the trend in imports and real imports and exports in China have been pretty positive at the moment. And it does lead me to believe everything we've been seeing that we are going to see next week with China's Q2 GDP number coming around 6.8%.